Oil and gas industry analyst Michael Ervin of MJ Ervin and Associates joins us now live from Calgary by the phone. Michael, thank you.
Good morning.
Good morning. Let's talk about the fact that the average price of gas at pumps across the U.S. has dropped to a near 4-year low. Here in Canada, we're seeing similar things. Just driving around Vancouver, we're seeing, you know, down from summer prices upwards above $1.50 a litre. Now we're looking at $1.20.9 at most of the gas stations. So to what do we owe this much price?
Well, two things. You know, there's always a difference in prices between the summer and the winter, or usually is, because demand for gasoline goes down in the fall and winter, and so that tends to reduce the markup at the refinery level. But of course, the big reason right now is falling crude prices. They've come down considerably, and as refiners are benefiting from lower feedstock costs in order to make the gasoline, those lower prices at the crude level are being passed along in the form of lower wholesale and retail prices at the pump.
You know, Michael, looking at GasBuddy.com, lowest price in the Lower Mainland, what, 118.9 over in Port Coquitlam. What are the industry predictions, not only across Canada, but say here in BC and Lower Mainland, of what we're going to see with these prices plunging?
Well, if you're talking about predictions, you might as well get out your dartboard. You know, crude prices in particular are very, very difficult to predict because they're driven by such things as geopolitical events and decisions made by the OPEC oil producers. So, you know, take your pick as to predictions. My own prediction is that I think we're going to see crude prices more or less level off where they are now, but, you know, some of that is going to trickle through to lower pump prices because of, you know, futures buying at the higher price. So, yeah, we'll see as a result some lowering of gas prices. I don't think we'll go much lower than maybe another 5 cents or so. But the good news is I think it's going to stay down for quite a while.
Now, you touched on the refinery markup. Consumers are often baffled at what governs refinery markup. Can you shed some light on just how futures and the markups at refinery levels work?
Yeah, well, you know, refinery markups work pretty much in the same way as crude prices. You know, we're seeing low crude prices now because supply is strong and demand is weak, so inventories of crude are high. Refined gasoline is a commodity just like crude, and in the summertime, when demand is high and it really pushes up against the total capacity of refiners to make that gasoline, then market forces push that up as buyers and sellers at the wholesale level really compete for a scarce product. When it gets to be after Labor Day, well, demand goes down, and now refiners are more competitive. I shouldn't say more competitive, they're competitive year-round, but they want to get their product out of the tanks and into the market, so the price goes down. It's not an easy relationship to understand in 10 words.
But it's one that's given us a break at the pump. Listen, Michael, thanks so much for joining us this morning.
It's been my pleasure.
Oil and gas industry analyst there, Michael Ervin from MJ Ervin and Associates, joining us once again. And yeah, I think it was, what, April? $1.50 per liter? This is a huge change what we're seeing going into the holiday season.